Mark Sebastian of Option Pit Mentoring joins me now for the final trade of the day. You have your eyes on the market. You're really tapped in here as a trader. What are you thinking?
Yeah, a lot of news to digest from the last week, and that's going to kind of set the tone for the next couple of months. I think the bombshell was the Fed this week. The Fed completely changed the way that they're thinking. It's not just their wording, it's how they're thinking and how they're approaching the market. The assumption was they want to raise rates 3, 4, 5 more times before they're done. Now the assumption is they're going to raise once and then they're going to look at the data. We may get a pause for 6 months, a year, who knows? It's going to be data dependent. That's something that markets want to hear as opposed to we're just going to gradually raise rates. The Fed is what I'm concentrating on.
How are you changing your trading strategy?
I think I have to go long into the end of the year. I like markets to rally pretty hard. That expected rate of increase, right? Bonds are not going to be rallying. Dividend yields now look a lot better than they did a week ago. There is going to be money flow out of bonds into the stock market, and I think that you're going to see a nice ramp into the end of the year. I think that there's decent odds we could even test the highs by the end of the month.
So would you put on an option strategy, or would you just go long in general?
I both. I like options a lot, so I might look at the S&P 500, looking at end of month 2,800 calls. Those are relatively inexpensive. I might look at just going long SPY or deep in the money SPX calls to mock being long the S&P 500. I like owning the stock market here.
You are bullish. Thanks for coming on the show.
Thank you.
Check out businessfirstam.com to find out where to see our entire show. And don't forget to like, follow, and share Business First AM.